Hello and welcome to What Goes Up, a weekly markets podcast. My name is Mike Regan. I'm a senior editor at Bloomberg.
And I'm Valdana Hayek, a cross-asset reporter with Bloomberg.
And this week on the show, well, if you've been anywhere near the internet in the last few months, you've probably read a poem or bits of a movie script or maybe even some dad jokes that were written by a computer, actually. The experimental chatbot ChatGPT has taken the world by storm since its launch in November, triggering a million questions about how this type of technology can disrupt various industries and fueling a fresh wave of interest in how artificial intelligence can be used by investors. We're going to get into it with the head of research at a company that's been using AI for a few years now to pick stocks for an almost $2 billion ETF. But first, Valdana, I try to go to ChatGPT. I've like everyone else, I've fallen into the hype of this ChatGPT, and I went on trying to get it to write us an intro to the podcast, but it's too busy. There are too many people using it that they just turn me down. So
same. I tried for you also, so that we can get a nice, fun intro from the robot, and it didn't work. And I even tried to trick it. I said, I have a very simple request, and I'm on deadline. Please, just can you help me out?
No, love, that didn't work?
No luck. No, the robot doesn't like me.
I wonder, the robot must have a PR rep that maybe we could finagle
hit up to complain.
Yeah, it's probably a robot PR rep. I don't know, but
a PR rep that is also a robot.
Also a robot. Yeah.
They'll just tell me to go to hell.
Is that what most of them say to you? Is that
Some of them. Yeah.
Oh my gosh! All right. Well, you tell me which ones. I'll get back to them. But I do think our guest is the perfect guest to unpack this topic. So why don't you bring him in?
Yeah, he is. It's Matt Bartolini. He's the head of SPDR Americas Research at State Street Global Advisors. And Matt, thanks so much for joining us.
Yeah, thank you for having me.
So we'll get into one of your AI ETFs in a bit, but maybe just to start, you can give us sort of your journey into working with ETFs and what you do.
Yeah, sure. So my journey into ETFs is, I've been working at State Street Bank essentially since the middle of 2000s, and worked my way up throughout the organization on the accounting teams, portfolio management teams, and then landed within the ETF teams, helping to conduct some of the research on our products, different portfolio construction topics, investment theses, market outlooks, and market commentaries. And that's really where my job is now at the head of SPDR Americas Research. Our job is to help make sense of a complex world by using data-driven insights. And we write market commentaries, market outlooks, provide some portfolio construction discussions to end advisors, and hopefully help them select the right investment choice for them. And if that's a SPDR ETF, then I think that's all great. But in some cases it doesn't. And that's sort of how we operate, trying to be fair and balanced.
Yep. And AI is obviously one of your areas of research, Matt. So I'm curious, this ChatGPT thing, to me, and I think to a lot of people, it seemed to have come out of nowhere. It launched in November, and granted, I don't follow the space that closely, but I think for a lot of people, it was just sort of dumbfounding how good this thing is right at launch. To me, I would have expected sort of to see a cruder version of this that wasn't quite as impressive. But how did you see it? Like, were you sort of as surprised as everyone else, or does your sort of research into AI, had it led you to kind of know this type of thing was possible and in the pipeline?
Yeah, so a lot of the AI work that we've done is within sort of portfolio construction and index selection on some of our funds. So we were aware of the ability to use things like natural language processing, predictive text, but also even just in our daily lives. I think some of the functions of ChatGPT we probably have just been benefiting from just in very small morsels. Whether that is, auto correcting your text or the predictive text nature within your iPhone of what you might say next. Like, that's sort of the same idea. Or even, when we use the Bloomberg terminal, and we ask the help desk, we sometimes get a very automated response back. That's all sort of pieces of it. The first time I saw it, we were sort of playing around with it of, write us a blog post about the benefits of ETFs. And it got it probably 80% correct, how we would want to structure the argument. And I think that's sort of where ChatGPT is that it kind of gives you about an 80%. And I was sort of joking with, some of my colleagues who have older kids that, ChatGPT would probably be a B- student. if it only ever turned in its homework, because that's kind of the surface level it gets. And I have a friend who's a professor at a college, and they've actually started to work on how to figure out, essays and reports that are written through AI. And the big thing is you got to look at the nuance. And ChatGPT doesn't really understand the complexity of nuances, particularly for topics like ETFs, where there actually is a lot of operational nuance.
As a B- student myself, that explains why I was so impressed, Valdana, I think.
If you were a student right now, you could use it to help boost your grades a little bit.
Yeah, well, that's, I think, the fear of everyone has.
I have a 9-year-old son who had to do a penguin project, and he, instead of looking in a book, he yelled out to Alexa, how fast do penguins swim? And I had to tell him that he can't do that anymore. So this is the new reality that we're all living in.
I know.
How fast can penguins swim?
I don't know. We'll have to ask Alexa. No, don't ask Alexa. Well, no, my kids, it's the same thing. They're sitting there doing their homework, and I hear them yell, "Hey, Google, what's 9 times 37?" And I mean, in some ways, it's just a calculator, and I think educators are going to have to get used to it and allow it to some degree. I don't know. It's such a strange new world. But Matt, talk to us about the Spider Kensho New Economies ETF, which actually has been using AI to pick stocks. For sort of the layman among us out there, how exactly does AI help in this stock picking effort?
Yeah, so the artificial intelligence behind it is natural language processing, and this is run by the index provider S&P. It actually started with the firm Kensho. That was a small startup that was incubated out of Goldman Sachs. S&P bought that firm and all of the IP along with it, and that's the index provider for the fund. And the NLP, or natural language processing, what it does is it scans through prospectus and other regulatory filings from companies, because you want to start with a strong source. Regulatory filings have to be quite prescriptive, and if you make falsehoods about that, there's penalties, right? So it scans through regulatory documents, searching for key terms to identify how these firms' material operations correlate back to areas of innovation, whether it's like enterprise collaboration, clean energy, advanced transport systems, drones. So scan through all of these regulatory documents, looking for the frequency of a term used, but also the words around it. So, if a company is saying that drone technology is incredibly important for the future growth of our business, that really shows some emphasis towards that type of innovation. So that will be scanned and recorded and classified appropriately into 25 different areas of innovation. And then from there, stocks are weighted in more of a modified equal weighted structure, where core firms to a specific innovation are overweighted to non-core firms. So basically, the way we sort of describe it is that the AI process selects the stocks, and then there's a quantitative weighting methodology to weight the stocks. But the reason why we went down this path of using AI is that we wanted something forward-looking, something dynamic, because back in 2018, we understood that in the ETF world, there weren't a lot of strategies that were this forward-looking, innovative type paradigm. A lot of it was based on revenue, and revenue is what has already been realized. That is a backward-looking approach, and we wanted something that was more dynamic and a forward-looking approach, and the AI process was able to deliver that for us.
Okay, so before you tell us more about that, I am interested in sort of the mechanics. So once the AI runs through and chooses these companies that it thinks, I don't know if thinks is the right word, but that it chooses as fitting the right criteria, do you then have a human go through the results and say, okay, this actually sounds pretty good, or maybe we don't want to have XYZ company as part of this portfolio?
So within the index methodology, there is sort of a human control element to it, almost like a quality control. So for instance, if a company is classified as innovating within clean energy, they use the term wind and solar quite significantly. It said it's part of the material operations. But when it comes down to it, there's a check and balance from the index committee to say, okay, well, does firm XYZ offer a product and service in this category? Or are they just some sort of, this is probably a bad term, but some sort of shell company that doesn't actually provide a product or service? They just Yeah, this isn't what they do. They just saying something that doesn't correlate back to their actual products and services. So that's where there's a little bit of a manual quality check to ensure that these firms are actually engaged in these areas of innovation and are not just talking about it sort of, extemporaneously. And the other thing is too, that helps in terms of, let's say perfect, we have a champagne problem that this fund becomes, $190 billion and someone wants to get into it and they just use the word drone 1,000 times to game it. That helps, right? That sort of manual override sort of quality check.
What I find fascinating about it, something like 560 holdings, so it's not a very concentrated fund. And, when you're looking for innovative sort of startup type of companies, a lot of times that means really small, even maybe micro cap companies that you have to dig through, which are not typically very heavily followed by, the Wall Street analyst class, just by definition, if there's thousands of them. And this really surprised me. In your notes, you say about 48% of the holdings have less than 10 analysts covering the stock. Is that almost a benefit for this type of strategy, that it helps you sort of find these hidden gems that are maybe being completely overlooked by the masses out there?
Yeah, I mean, AI at its heart is to help increase efficiencies and productivity. And what this does is it allows us to cover the uncovered. So if you're using an analyst recommendations, analysts can only cover so many stocks within a given day. And there can be some firms that are quite innovative, that are, performing and producing some really interesting things within our economy, whether it's things within advanced healthcare like wearables, that aren't really covered by Wall Street analysts because they might be smaller capitalization securities. And we sort of just know this even from like traditional finance, that the majority of analyst recommendations are in that large cap space. And then small caps and mid caps sort of do not get as much notoriety or coverage. And AI basically is one way to solve that problem, to give you a deeper breadth of opportunities and really broaden your scope of companies that may be considered innovative.
So I want to give a shout out to Katie Greifeld and Sam Potter on the cross-asset team at Bloomberg, because they had this really fascinating story that said something like, we asked ChatGPT to create an ETF for us, and here's the results. And actually it had done a really good job putting something together. And you were part of this story, and Katie and I were chatting about it afterwards. And she said, Matt had all these insights into the composition aspect of, because you guys have your own AI ETF. And I do wonder about that. Like, is the power of the AI being able to create an ETF, does it lie in the sheer amount of work that it can do? Whereas you might not be able to have like a team of humans combing through so many different things to the point where they get to an ETF that has 560 components.
Yeah, it's all about creating efficiencies and being able to capture, undiscovered or unrepresented areas within the equity markets. Even just looking in core portfolios, disruption happens further down the cap spectrum. And that's why using something that is able to explore data sets that are really unstructured, right? Because revenue profiles, balance sheets, those are more structured data sets. But using textual language processing to identify firms based on what their material operations are saying is one way to help classify them into these areas of innovation. And I think one of the things about this fund in particular is that we do understand that innovation does not just benefit the pure plays, is that the ecosystem around it can benefit. The whole idea during the gold rush of the 1800s of you would rather mine for gold or sell the pickaxes and the tents to go along with it. You probably had a pretty good business model if you were selling a lot of pickaxes in the 1800s. And that's sort of the idea here is, the ecosystem is also beneficial. And how do you identify that ecosystem? A firm like NVIDIA, for example, they make all of the sensory technology within autonomous vehicles. That's a supplier to that ecosystem. And as autonomous vehicles take off, they're going to benefit as well. So using AI to to detect that can really help create a really targeted but diversified portfolio of innovative stocks.
And basically, this ETF has many more components than it would if a team of humans was putting it together, right?
Yeah, so the statistic there of over 10 analysts, 48%. So let's just say we use that as an example. Like it needs to at least be covered by 10 analysts. Well, right then and there, we lose half the portfolio. And 10's not a big number. So if we were to take more of a human-based approach to it, it would be far more concentrated of a portfolio. And that's what we see with the other broad innovation ETFs out there, is that they're far more concentrated. And they're also far more geared towards large cap securities. So you do not get the differentiation that you would want in something that is supposed to be innovative and not largely represented within core portfolios.
Right. When this fund was launched, I guess it was 3 or 4 years ago, growth stocks, innovative, disruptive stocks were, the hottest things going in the market. And the fund did great. 2019 up 37%, 2020 up 61%, up about 4% 21. Then obviously last year was kind of the rug pull out from under growth and innovation, down 32%. So I'm wondering, is there a way to layer AI on top of a fund like this to allow it to sort of shift to a value strategy, or to kind of sniff out the market cycle into what's kind of the new hot factor to get into? I know that's not the goal of this fund, but I wonder if you think about that. Is there a way to not only pick the individual stocks under a certain theme or strategy like this, but to also have that strategy sort of evolve over time and try to isolate the upcoming market cycle and what's the leadership's going to be in case growth does have a downdraft like this?
So that's when that becomes just market timing, so to speak, right? And you're now doing some form of factor rotation. I think you could perhaps create more of a style neutral innovative portfolio, but that becomes much harder because then you're going to have, in an optimization framework, the optimizer is going to be working really hard to mitigate any of that small cap bias. So, and then you're just going to basically look like, a large cap growth tech exposure. So it's always this trade-off of like, do I want to mitigate some of these implicit style factors and get, sort of close up that tracking risk to traditional benchmarks, or maintain the purity of what we're trying to do of innovative exposures? So you always try to find that balance. And if you try to create more style neutral, or something that is, less impacted by market cyclical factors, then you're going to lose some of that purity of your intended focus. And I think when we are having discussions around performance, we always just go back to attribution, and we will use, fundamental risk models. And if we look at it since inception, industry and stock selection effects relative to, the S&P 1500, for example, industry and stock selection effects have been positive to the fund's return. It has been additive to performance. The industry part is interesting because there are some industries like semiconductor, software, sort of wearable technologies within healthcare. Those industries are going to be more innovative than, say, some firms within like staples, your sort of consumer goods products. So industry effects is a byproduct of the focus of innovation. Stock selection effects is a byproduct of the AI selection methodology and then the weighting process. The detractors of returns have been style factors, namely higher volatility, lower quality, and high growth, since inception. But those factors are implicit because it's not what we're seeking to obtain, but they're also cyclical. So high volatility, low quality, high growth were being famously rewarded starting in 2020 and through sort of mid 2021, right? So that was a tailwind to returns back then. So that's how we always like to frame the performance conversation, is breaking those three components out, noting that the style components are going to be cyclical and move in and out based on market directions.
I'm always curious how ETF issuers decide on a theme or a topic or, putting an ETF together. So a couple of years ago, was AI something that you guys, when you got together, were thinking was going to be a big deal in the coming years? Or is it sort of, which I think this happens a lot in the ETF space, let's just put it out there, give it a try, and see what happens?
So it's definitely not the latter within our firm. We're definitely not going to...
you were going to say that.
Yeah, we're definitely not going to be like, hey, this is a hot dot. Let's throw it out there and see if it works. That's just not what we do. With respect to these funds, we have a pretty strong heritage within sector and industry investing. And we know that there are thematic investors out there. We see it all the time within our traditional industry suite. Someone that wants to play a rally in oil stocks will go buy XOP, our oil and gas ETF. And that's a thematic investor. And we knew that thematic investing was going to be on the rise because there's some thematics like autonomous vehicles or cybersecurity or clean energy that are hard to gain exposure to under a traditional GICS framework because some of these firms are operate across GICS sectors. Clean energy is a perfect example. You have firms within the legacy energy sector, the utility sector, industrial sector, technology sector. So you want to go across the sectors. So we were like, well, how do you go about doing this? Again, we wanted something that was forward-looking. We knew that revenue was backward-looking. So this is how we landed on, a firm like Kensho, and then later, obviously, S&P Kensho as the combined entity, of having a really unique value proposition of using natural language processing to detect firms that are listing out these innovative services or innovative corporate designs as part of their material operations. So that was really the impetus for it. And I think, I sort of remember one instance. It was obviously before we launched. It was probably 2015, 2016 timeframe when we were really starting to kick the tires on this. The Pokemon augmented reality iPhone app was just really, really popular. I remember playing softball and seeing a bunch of people hanging out by the left field tree. We had no idea why. And if someone had put a Pokemon stand, I don't play this, so I have no idea. And I remember talking to folks internally, it'd be really interesting if we could have something that focused on these type of firms, innovating within virtual reality and augmented reality, coincided at the same time as we were kicking the tires on this process. And that's kind of the idea. Now, owning 20 stocks in augmented reality, is that a pure play investment thesis for the long term? Probably not. But having it part of a more diversified, innovative exposure probably is, and that's sort of where we ended up.
They were looking for Pokeballs, I think, right?
Yeah.
Some rare Pokemon character or something. I don't know. I never played it either, but it...
Me neither, but I remember it being a big hit.
I do remember people wandering around, staring at their phones, bumping into each other. It was... And then it kind of came and went, though, which is weird. It's I almost thought that type of gaming would have caught on more, that using that location element of your phone more. But who knows? Maybe something is coming. I'm curious just if you can give us kind of a 30,000 foot view of how you're thinking about AI now. Like I said at the beginning, this ChatGPT does seem to sort of us laymen like a big innovation. Like suddenly the innovation in AI has accelerated faster than I think people realized. Tell me if you agree with that or disagree, but also in general, where do you see AI? What industries do you see being most susceptible to disruption from AI going forward?
Yeah, I think for the most part, AI investment, I think is projected to increase something to respect of 115% over the next 3 years. The statistics around AI investment is astounding. You see it every day, big numbers, big percentages. I think from an industry perspective, something that like paralegal services could be something like that. Research documentation, where you're able to scan something very quickly. And I think you can even see that in some of the McKinsey studies that talk about how, upwards of 25% of the workforce will need to change jobs as a result of advances in artificial intelligence. Legal requests are likely to be one of those because, going and pulling all of the specific, court cases over the last 50 years related to one topic, that could be done quite easily through natural language processing, using predictive text, searching for text. I think that's just one of those. Just even within my team, we're trying to use, some form of AI to help, write weekly notes for us. That's something something I put out in our plans for this year. It's just, again, creating more efficiencies. And some of the weekly notes are more about, fund flows and market performance and, having something easily done quicker that is also can be helped from a compliance perspective too, because everything's rules based. But yeah, the legal one is always ones that comes to mind. Any sort of document search, document retrieval, that's where AI I think is some of the more low hanging fruits. It doesn't sound as flashy, but that's one of them.
Well, if you're a law firm, you're certainly going to save a boatload of money if you can, hire fewer paralegals to do all that sort of legwork.
Yeah.
But I think podcast hosts are totally fine.
Oh boy!
Right?
Don't jinx us.
Yeah.
Don't jinx us. I don't know. The ChatGPT wrote some pretty good dad jokes, so I'm feeling threatened.
You might be out of that job, yeah. But you can keep your podcast job for now.
Who would have thought that they could create a young Luke Skywalker in the most recent or last seasons of The Mandalorian? All of a sudden they can use AI and some of the other stuff to create different voice structures. Who knows? But I think podcast hosts have a good chance of outlasting it for at least the next 20 years.
Fun podcast hosts. Maybe just to bring it back to the market, I'm wondering which sectors maybe can stand to benefit the most from AI.
It's sort of tough because I think obviously within technology, a lot of firms are already starting to use AI in their processes. I would probably say within the industrial sector, sort of supply chain logistics. Other sort of, consumer-oriented areas in terms of consumer service. So, you can obviously already see it with Amazon and some of the way they interact with consumers and using AI. I would say probably those three would probably be the biggest. It's around industrials, so, using supply chain, and then consumer. And then tech is just going to benefit because they're the ones sort of creating the innovation.
Yeah. Matt, I know. So we've been talking a lot about AI, which is one of your focuses, but not the only one. So I'm curious if you can just give us kind of the state of play in the ETF market as a whole. What kind of flows are you seeing this year? The market obviously off to this super strong start, growth and innovation doing well again. Where are you seeing the flows? Are people chasing that sort of rebound in innovation and growth, or are they still going into value? What do the flows look like?
Yeah, so thematic ETFs last year in 2022 actually had outflows, and they had outflows for the first time since 2013. Now, KOMP actually had inflows, so a little bit of a divergence there, maybe speaking to our efforts, but a lot of it was sort of performance related. Roughly only 13% of all thematic ETFs in the ETF industry beat the S&P 500 last year. That's actually been different this year. This year, we're around 86% of thematic ETFs are beating the S&P 500. Yet at the end of January, flows were still negative for the broader category. So ETF investors are still a little skeptical, which I think is not too surprising given the dour performance results from last year. But, again, within our suite, we've actually seen inflows, which, perhaps speaks to the efficacy of the product type, the structure, the rationale, and the investor motivation.
Matt, we can't let you go without asking you about SPY, which is probably the best known ETF out there. And it just turned 30 years old. So happy birthday to SPY. I know you guys threw it a couple birthday parties. But can you maybe tell us about this? Like, it's been around for 30 years now. I think we had a story on Bloomberg saying, it's held the crown for so long, but can it continue to hold on to this sort of the crown of being the most prominent and well-known ETF? So maybe just tell us about SPY a little bit, just because we have you here and you're the sort of preeminent figure on talking about this.
Yeah. So, I mean, SPY, like I said, without SPY, there's no KOMP, right? There's not a lot of other ETFs out there. It started the industry. The infrastructure that it has is the reason why we do have ETFs, the ability to do in-kind creation redemption. And it's been time tested throughout those past 30 years. And what I think this year taught us, SPY had a record amount of users come to that product in terms of it had $9.5 trillion of trading volume. It had a record amount of overall shares traded, and roughly I think it's 25% of all trading volume in ETFs was on SPY. So I think that's just really a good indicator of how much usage it still gets, even though it's 30 years after its inception. And it was interesting, we were talking about ChatGPT earlier, is that when you do ask ChatGPT what is the best ETF, it does come back SPY. And I think it's with reason. It's the biggest, it's the most liquid, it has the longest trajectory. And for that reason, ChatGPT recognizes being one of the better ETFs out in the marketplace.
Bringing it full circle there. I like it. Oh, Matt Bartolini's the head of SPDR Americas Research at State Street Global Advisors. Great stuff. We really appreciate your time. We cannot let you go, though, until we hear the craziest thing you've seen in markets this week. Vildana, as always, why don't you get us started?
Okay, so mine is in crypto this week, and it's this report by Chainalysis, which I don't know, if you don't know about Chainalysis, they sort of do like forensics, basically, of the blockchain and within the crypto space. So it's interesting that such a report will come from a crypto company specifically, but basically they found that thieves stole a record $3.8 billion worth of cryptocurrency last year. And at North Korea itself, it's estimated stole $1.7 billion in 2022.
Wow.
Up from $400 million the year prior, which is just crazy amounts of money because,
it's mind-boggling.
People in crypto don't like to talk about this aspect of crypto, but then you have this crypto company actually coming out with this report talking about.
I wonder if that's at current market prices or it's probably at the price of the assets when they were stolen, I would imagine. But
I would think so. Yeah, I would think so. But I mean, yeah, but even if you think about where Bitcoin was, a couple months ago versus now.
I guess, and they probably don't answer this in that report, but I wonder how much of that is sort of trapped. You hack and you steal some crypto and it's stuck in a wallet and everyone knows it's there, and it's sometimes hard to launder that. I'd be curious to see how much of that actually, these thieves are enjoying the benefits of that.
There are some companies, some crypto like researchers that look into when sizable sums of coins are moved, or like 19,000 coins that hadn't moved in 10 years or stats like that, which are really interesting.
And that's when
but you never know where they're going or what's happening.
That's when the authorities always catch them too, is the minute you try to move it and there's something else, then
exactly. The FBI is watching.
That's a pretty good one, Vildana. How about you, Matt? You see anything crazy recently?
I mean, I actually thought one of the craziest things was the market's reaction to the most recent Federal Reserve rate hike. I didn't think it would be that overwhelmingly positive. Powell was still pretty persistent on the need to hike rates. And right now you have a 2-year yield that is roughly 50 basis points below what the Fed funds is. And that doesn't really happen. So I think that's pretty crazy, is that, borrowing money 2 years out is cheaper than overnight rates at the Federal Reserve. So I think I'd be interested to see what happens in the ensuing days if that course corrects.
Yeah, that is it is a bizarre upside down world. And I don't think the market reaction was anything what he had intended. I've joked that Powell should probably have a Bloomberg terminal in front of him when he's giving the press conference to amend his answers to to have the desired effect, because I don't think that's what he was after that day. But
we should send him one.
Yeah, I bet I'm assuming he has one.
I know. I think he has one. Yeah,
He's
but
just
he
got to
should
start bringing
definitely
it
have
with him.
one if he doesn't.
All right, well, I'll give you mine. Valdana, as I'm not really a car guy. I'm more of a pedestrian. But
really?
Yeah. But
what happened to those 4 Porsches that you have?
Yeah, they're still imaginary.
In your garage?
Yeah, they still are imaginary. I am into when people pay ridiculous prices for collectible items, as you know, though. So the story is courtesy of CNN. So have you ever heard of the car company Bugatti? They make these hot rod supercars, they call them.
Yeah, I heard you have 2 of them.
Yes. Yeah, matchbox size. But so Bugatti apparently is transitioning to electric. They're going to go hybrid first, but they're done making strictly gas-powered cars. So they recently produced the last pure gasoline-powered car they're ever going to make. It's I'm probably going to butcher this pronunciation, the Bugatti Chiron Profili, I believe. I didn't take French, but
I have no
something
clue.
like that. So it went up for auction. They, instead of just selling it, they put it up for auctions with Sotheby's, I believe. I'm just going to tell you what it went for on auction. It's boring to name the price. 10.7 million. This car went up.
Million.
Brand new car. Set a record for the highest priced new car sold at auction. But what I'm going to make you guys square off against each other in our game show is, what do you think the max speed is that this vehicle is capable of reaching? The fastest it can go.
Oh my gosh. Okay.
In miles per hour for a $10.7 million car. How fast do you think you get to go in that car when you floor it?
It's only fair if we can name it in kilometers per hour.
All right. Well, feel free to do that, but you need to translate it to miles for me.
Oh my gosh. I'm guessing it's not as high, but I know nothing about cars. Am I going first, or is Matt going first?
I think you go first. Yeah.
Fine. I'm gonna go with 260.
260 miles an hour.
I don't know. Is that a lot? That's a lot. That's way too much.
That's
right?
a lot.
That's like a plane. Yeah.
I would probably put like 215, 215.
Oh my gosh! I think we have our first tie in the Price is Precise. 236.
Wow.
So you guys are pretty close. Although traditional rules, you went over, Valdanis. I think we got to give it to Matt.
I went over.
Yeah.
It's fine. The guest can win. That's
236 miles an hour.
Price is Right rules.
That's right. Here.
Price is Precise rule.
Yes, don't get our lawyers involved.
This is called the Price is Precise, yeah.
Here is the crazier thing, though, is that's not the fastest car Bugatti's ever sold. The fastest could go 300 miles an hour. They say, quote, in theory. I'm not sure anyone's ever managed to get it up to 300. I don't know if you could.
Tom Cruise would, if you gave him a chance.
I'm sure.
For one of his movies.
I'm sure he could.
Yeah.
He's probably had several of these. But I'm not sure if you could, theoretically, if you could drive a car 300 miles an hour. I feel like it would take off like a rocket ship at that point.
I would. My heart would burst from it. I'd be so scared.
You definitely have to, if you're driving that fast, you got to listen to your podcasts at double speed, I think. So if we have any Bugatti drivers out there, allow them to double speed us.
2x. 2x. Yeah.
Pretty good, though. You guys are both in the ballpark. I'm not sure what I would have guessed. I'm not sure if I would have gone over 200. It just seems insane to drive over 200 miles an hour. But anyway.
You don't go 200 miles an hour on the New Jersey Turnpike?
Oh, New Jersey Transit I do, yeah. That's on the train.
Transit, different.
Yes. When we're late. Anyway, Matt Bartolini from State Street Global Advisors. It's a real honor to be able to pick your brain on all these topics. Wish you all the best, and hopefully you'll come back and talk to us again someday.
Yeah. Thanks, guys.
Thanks, Matt.
What Goes Up will be back next week. Until then, you can find us on the Bloomberg Terminal, website, and app, or wherever you get your podcasts. We'd love it if you took the time to rate and review the show on Apple Podcasts so more listeners can find us. And you can find us on Twitter. Follow me at Reganonymous. Vildana Heinrich is at Vildana Heinrich. You can also follow Bloomberg Podcasts at Podcasts. What Goes Up is produced by Stacy Wong. Thanks for listening. See you next time.